Hello everyone, welcome to our last episode for the year 2020. It's been a tough journey this year. There were so many challenges in the stock market, but also those challenges led to some incredible opportunities. So I hope you guys took advantage of those opportunities that the market threw to us. So this is our last episode for the year. As we know that we only have 4 days left, 4 trading days left for the year. We'll only be trading from Monday until Thursday, but you don't expect a lot of liquidity because a lot of people are on holidays. So very few people will be focusing on the stock market, but then it is what it is. The market is there. If you want to take advantages of the opportunities that are there, this is your last chance for the year 2020. And then again, we start with our risk disclaimer. We're just sharing ideas. We're not giving any financial advice on how you should do your investment. So we hope that is clear now. Okay, the first stock that we want to look at today is Cartrack. Cartrack has reached a new 52-week high. Also, the stock has reached its all-time high. So it's one of the best performers for 2020. As you can see that since the beginning of the year, the stock has done incredibly well. It is up by around 94%. So yeah, for those that bought it at the beginning of the year, they are sitting at 94% profit. But for those who missed the opportunity, then it is what it is. Yeah, you win some, you lose some. But for today analysis, as you can see, we said that the stock has reached the all-time high. So it broke outside this small tight not tight range, just above this resistance level. It went up and then it came back a bit. So far it's still stuck in that area of value. So since we are doing trend following, we will be buying the stock. We buy stock that reach all-time highs or 52 quick highs, and then we set a stop, and then we're looking to set our stop just below this level. So now, as you can see, it's a large gap between these two. That is why we manage risk using position sizing. We're still going to buy the stock and keep the stop level at these levels, but we'll buy just the right amount of stock to ensure that we still risk 2% of our capital in this trade. Okay, so now the other stock that we're looking at, let me just check at this list. So okay, we're looking at MET-A. MET-A just closed above the 200-day moving average last week. So now the stock, it's a bit erratic. It's been moving, falling and moving, but by the end of last week, it closed above the 200-day moving average. So we're looking at that stock as well. Another stock that closed above the 200-day moving average, it's HDC, Hudalco. As you can see, it has been trending lower for quite some time, and then it's been consolidating. Somewhere in October, it started to close above the 200-day moving average, trading a bit higher a bit, and then losing that momentum, retraced back to the 200-day exponential moving average. So now, as you can see, it seems like it's rejecting the lower prices. So we'll see if the stock is going to continue to trade higher. But at this level, it's back at an area of value. So we'll be buying that stock with a stop 1.5 ATR below the 200-day exponential moving average. And then we see how the stock performs in 2021. And then some of the stocks that have closed above 50-day moving average. The first one that we look at is Blue Label Telecoms. We have a position, as you can see here. We've had this position since the 1st of September. We've been holding. So it's not moving a lot on the upside, but it's been holding that position well. And then, as you can see, it pulled back. So this is the second pullback on the 50-day moving average. but as you can see now, it's trading above the 50-day moving average. So we're still having that position. If you missed the entry before, now this could be another opportunity for you to buy the stock as it is trading on the area of value. And for us, it's an opportunity to add on our current position and then set the stop 1.5 ATR below the 50-day moving average. And then again, we spoke about South 32 a couple of weeks ago. We mentioned that it broke above the 200-day moving average, and then it did trade higher for quite some time. Then there was a pullback on the market, but now, as you can see, it seems like it found support above the 50-day moving average. So if you missed the first entry around 25 rand, this could be another entry opportunity as it's on the area of value. Otherwise, if you are skeptical about buying a pullback, then you can wait until the stock break above this resistance level at 30 rand per share. Then you can buy the stock then. But also 50-day moving average pullback is an area of value that you can use to make your entry. Then let's see, we've got PSG. So PSG, it unbundled some of it, as some people know that PSG is a holding group. So there are many companies under PSG. It offers different services. It's not an individual company that does specific services. So sometimes it's a bit difficult to look at a company like that. People who are familiar with finance terms, they will tell you about some of the parts and stuff like that. So now, as you can see, they unbundled some of the investment. I think they sold 30% stake in Cartrack. So the share price was reduced. But prior to that, the stock has been trending lower for quite some time. I guess a lot of the people in the investing community have been asking PSG to unbundle some of the investment so that it unlock value, whatever that means in finance terms. So now, as you can see, since the unbundling, Capitec has been trading higher, moving sideways bit by bit, until to a point where it closed above the 50-day moving average. So now this is not a typical signal that we take, but previously we have invested in Capitec, not when it was trending lower. So now we're just going to take a small position here on Capitec. It's just going to be a small punt. How we're looking to play this trade is that we are expecting PSG to maintain the position above the 50-day moving average, and if it does that, we expect the stock to continue to trade up until it reaches a resistance somewhere in a 200-day moving average. Whenever, we don't know how long it will take. It can happen, it may not happen. The two possibilities that will happen is that the stock will trade above the 50-day moving average until it reaches the 200-day moving average. Then that will see the stock move at least from 60 rand per share to all about 100 rand per share. But also the downside is that the stock will fail to trade higher as we expect it to, or as we would like it to trade, and then it will close below the 50-day moving average and probably continue to trend lower. If it does that, we will exit our long position. But for now, that is how we are planning to play the trade. If you enjoy the content of this channel, now it's the right time to click the subscribe button and the notification icon. If you have any questions, comments, suggestions, please leave them in the comment section. We will attend to them and get back to you. Okay, another stock that caught our attention is HECI, or we're just gonna call it HECI. So as you can see, there is a 50-day, 200-day exponential moving average cross. The stock has been trying to trend higher for quite some time. It's one of those stocks that pay dividends from time to time, but as you know, our focal point is on technical analysis and trend following. But that is just a side comment, the dividend. So now this is an opportunity. A 50 200 day moving average cross is also a buy signal in trend following. So it's a signal that you got in there. So if you buy the stock, we look at setting the stop loss 1.5 ATR below the 200 day exponential moving average, and then wait and see how the stock plays out. Previously we spoke about West Coal, saying that it was trading, it was approaching the 200 day moving average. So now as you can see, West Coal handled that position very well. It consolidated a bit around, stuck between 90 cent and 80 cent. So now it broke outside that small range. Now it's currently trading at 95 cent. So we expect the stock to continue to trade higher. This could be one of the stock that will give you couple of returns, maybe 50 to 100% returns. But remember, always set a stop loss just in case things don't go the way that you anticipate them to go. But yeah, West Coal is one stock that we're looking at. And just a quick update. Previously, we spoke about African Rainbow Capital while it was approaching the 200 day moving average. At that time, it was trading below 10 cent. So now, since then, the stock is up by at least 28% since we made that comment. So yeah, some of the trades they work, some of the trades don't work. The only way to manage a trade is to always have a stop loss. Well, other people, maybe fundamental investors, will look at the difference between the current trading price and the intrinsic value of the stock. But in our case, we're doing technical analysis. We always have a stop loss inside. So that is all the stocks that we'll be looking to trade in the last 4 days of 2020. Then we will see you again in 2021. We hope that you are having a nice festive season. Unfortunately, we're also experiencing the coronavirus disease, but we hope that we are keeping according to the government recommendations. Wash your hands, wear mask, try by all means to keep social distance, stay safe, and ensure that you enjoy the festive season with your family and friends. We will see you again in 2021. And we would like to thank everyone who has subscribed to the channel. For those who haven't subscribed yet, we would like to ask you there to subscribe. And if you loved the content that we've been publishing for this year, please click the like buttons for the videos that you like. And also we want to mention that on our playlist where we talk about books and how-tos, we want to tell you now that we are now on Amazon affiliation program. So all the books that we'll be recommending, we will be issuing link to Amazon website, so that if you want to purchase those books, you can get them from Amazon. See you again in 2021. Thank you again.